When you're trading a 70 volatility asset class, you're going to see 50% drawdowns yearly, maybe even 2 times a year. Really, it's been over the last 4 or 5 years, it's been every year we see one of these.
Cryptocurrency the last few days has gone nuclear, dipping to lows and oversold territory not seen since the COVID-19 panic of March 2020. From its all-time highs just mere months ago, the king of crypto, Bitcoin, has fallen over 50%, with Ethereum and a range of altcoins falling anywhere from 60 to 90% from their peaks. With investors now desperate for some relief but still uncertain regarding what the Fed's actions will entail in regard to interest rate hikes, the outlook for the market is still unclear. With crypto's latest crash, macro investor Raoul Pal, who has been famously bullish on the entire space over the last 12 months, released an emergency update to investors to explain what on earth is going on. Make sure to stick around to the end of the video where I will cover Raoul's latest Twitter updates as well as what is going on with the on-chain data. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
So, little quick update for Real Vision Daily Briefing. Obviously, crypto market's going well today to the downside. I mean, this has been going on for a while. How I try and put this in perspective is that when you're trading a 70 volatility asset class, you're going to see 50% drawdowns yearly, maybe even 2 times a year. Really, it's been over the last 4 or 5 years, it's been every year we see one of these. It feels like that is now a normal function. And I also notice how little people are freaked out by it, which I think is a really good thing. I think people are starting to understand not using leverage, not having too much size, and understanding the long-term time horizon. So, you know, we are seeing liquidation, and a lot of this is based around the thesis that the Fed are going to tighten and therefore risk assets are going to fall. I went back and tested that hypothesis. And really, when you go back and look at the 2010 period to 2016, the Fed kind of stopped QE, the balance sheet ran off for a bit, then they had to restart QE again because the economy takes a while to get traction. I think that's going to be the case this time around as well. But even when they do hike rates and even when they started tapering, generally what happens is the markets get a little unsettled at first, but then resume back to normal. Because basically, if they're tightening, it means the growth is decent. And so if growth is decent, equities do fine. And that's, I think, crypto is getting part of that whole risk cycle. I think we're at the juncture where we're going to start to see economic growth and inflation starting to slow. I think we're at the transition point and that's upsetting markets as well because they're really struggling to try and figure out, okay, what the hell is this all about and what is going on? So my view is that markets continue to be volatile for a bit. There's some more downside to come. If we go back and look at the NASDAQ or Amazon and stuff over that period, we would see these kind of 20% drawdowns, 15% drawdowns, and then the market explodes higher again as the central bank starts realizing that they can't raise rates as fast, and the market does, and then everything stabilizes yet again and things move forward. That's kind of my base hypothesis here. Could we have further downside? Could we be forming a head and shoulders top in the NASDAQ? Could that knock through to Bitcoin? Sure. I've said for a while now the Bitcoin downside is probably 30,000. I think we're in the kind of buy zone. I'm certainly looking at adding ETH myself here into this area between 2,800 and 2,600. I'm starting to see DMARC weekly counts on Bitcoin last week, on Ethereum this week, still missing the daily 9 counts. So I like to see these technical indicators stacking over different time horizons. The daily one would come in maybe on Monday, Tuesday, something like that. So I've got my eye really focused on this. It's pretty normal. I think people are, as I said, people are getting used to this. So anyway, good luck. Nothing to freak out about. Interest rate rises are almost never negative for the market. What's negative for the market is when the yield curve inverts and we hit recession. That's when markets go down and stay down for an extended period of time. We're nowhere near that yet. The yield curve is, however, starting to flatten every day, which is suggesting that the Fed can't really raise rates. Certainly, maybe not past June. So let's wait and see. The rates markets are pricing in something different in, let's say, euro dollars, but the yield curve itself is showing something different. Confusing, but important. So keep an eye on all of this. The yield curve, crypto markets, looking for your entry points, where you want to add to those positions. Let's have a look at equities, see what happens. If equities start falling further, the Fed put always feels like it's about 15%. So maybe 15 to 20%, that's the downside. So maybe some more pain to come, and then we'll see from there. My view is 2022 is a year of weaker growth, lower inflation, and that tends to be good for risk assets, particularly growth stocks. So, I'm even looking at entry points for things like ARK, which are falling every day, and we're now 2 standard deviations oversold versus a logarithmic trend. So it's getting really interesting to me, but too early to pull many triggers. And I just wanted to give you a quick update. Hope that helps.
So there's Raoul's emergency update video. In his view, crypto has got caught up in the same uncertainty and fear that has gripped growth stocks, being that of higher interest rates and less monetary stimulus. However, either way, with Bitcoin and crypto being such a volatile asset class, in a long-term view, it's all par for the course. Raoul expanded on his views on Twitter, comparing crypto to the exponential growth stock that was Amazon back in the 2010s. Raoul writes, "Remember how hard it was to hold onto Amazon? This was post-recovery when rates threatened to rise back in 2010. And here is BTC post-recovery when rates threatened to rise. I personally think there is a lot to learn from Amazon and how it traded as it gained network effects. In the end, network effect models are encapsulated by their log trends and regression channels, along with the 48-month exponential moving average for BTC. All else is noise." So Raoul's suggesting because they are both exponential user growth assets, the price story will play out similarly to when the threat of rate hikes was looming overhead in 2010. For those curious, Amazon went on from this price action to over 30x over the next 10 years. Will we see a similar story unfold with crypto? Now, turning to some of the latest on-chain data, out from Crypto Quant, we have some data on Ethereum balanced on all exchanges. Although we have seen a small uptick since hitting all-time lows in November, we really haven't seen a huge influx of ETH back onto exchanges yet. Although on-chain data only does tell the supply side of the story, with current demand, prices will remain muted. However, once demand does return, because we are continuing to see a decline in ETH supply, the move back up in theory should be sharper and faster than we have seen in the past. Looking at some on-chain Bitcoin data, we see a very similar story playing out. Out from on-chain analyst Will Clement, we have the Bitcoin supply shock ratio, which as you can see has remained completely unfazed by the last few months' price action. If anything, long-term holders have strengthened their resolve and are stacking sats at a faster pace. However, again, Will Clement himself is quick to point out that this is only showing one side of the story. Replying to Lynn Alden, he writes, "Completely agree, Lynn, supply side looks great, holding behavior is strong. The qualitative view of Bitcoin's float is very much in bull's favor. Problem is lackluster of demand, likely because of uncertainty around monetary policy." Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next video, and as always, have a great day.